Hi, greetings everyone. I'm Professor Suneel Maheshwari with the Department of Accounting at Eberly College of Business. I'll be your instructor for the course. Today we will cover Chapter 2 on job order costing, and objective for the course will be to explain the purpose of cost accounting. Then we'll talk about job order costing system and distinguish it from the process order costing system. We'll explain the flow of cost in the job order cost system and preparation of job cost sheet. Within that, how to accumulate the cost using the predetermined overhead rate and how it is applied to a job will also be discussed. Two basic type of cost system that are used are job order cost system and a process order cost system. Now, in terms of job order cost system, the cost for a job can be accumulated for every job. Job can involve a single item. For example, if you're making a Disney movie, it's a job in itself. Or it could be for a batch of goods, like if you're making invitation cards for a wedding, you would have a batch of say 500 cards which will be printed, and all the cost associated with that job will be accumulated for in a job cost sheet. Now, in a job order cost system, each job has a distinguishing characteristic, and you will have to compute the cost for each job. The process costing system is used when you use a large volume of similar products. For example, in a cereal manufacturing, or it could be a chemical manufacturing plant, or it could be ice cream, where one unit is not distinguishable from another unit. So in that cases, in those kind of situation, you use the process order costing system. Now, in a process order costing system, you assign the cost to the department or processes for a specified period of time instead of to a particular job. So for example, there might be a process of pumping the oil or benzene being removed, and then benzene pellet might be made to produce CD. Each of these is a separate process for which the cost will be accumulated in each of those processes or in each of the department to which they are related to. Now, in a job order cost system, how does the flow of cost work? It basically follows the physical flow of goods. So first, manufacturing costs are assigned to work in process. And then once the goods are finished, they move from work in process to finished goods. And once the goods are sold, they move from finished goods to cost of goods sold. So for example, if you are to make a journal entry for selling the goods, you will debit the cost of goods sold and credit finished goods. Or when the goods have moved to the finished goods, when they are finished, you will debit the finished goods account and credit the work in process account. So the physical flow of goods and the costing for those goods basically follow a similar pattern. So all the manufacturing cost in terms of raw material, direct labor, and manufacturing overheads are accumulated, and then they are assigned to work in process inventory. Once the goods are completed, it moves on to the finished goods inventory, and from the finished goods, once the goods are sold, it moves to the cost of goods sold. So you see over here by representation of the T account what will be debited and what will be credited. Again, if you sell the goods, your cost of goods sold is debited and the finished goods inventory is credited, and so on. Now we'll talk specifically about accumulation of cost in a job cost sheet for a job costing system. There are three components that go into the job cost sheet. One is the material cost, second is the labor cost, and third is the overheads. Now we will see how each of them is transferred to the job cost sheet. Here is an example of a job cost sheet. It specifies the job number, quantity of items that needs to be produced, description, date, and what a column for direct material cost that is accumulated, a column for direct labor cost, and column for manufacturing overhead. What we are going to do next is deal with each of these items in a little bit more detail so we can find the total cost of this particular job. As far as the raw material costs are concerned, they are assigned to a job when the materials are issued. And the cost is transferred to the job cost sheet through a materials requisition slip, which is basically a written authorization for issuing the raw materials. Here is an example of a materials requisition slip. It tells you to which department it needs to be delivered. It tells you what job it needs to be charged to, a requisition number, who has requested it, who has approved it, what is the quantity, the description, stock number, and the cost. So cost on this total of $1,000 for 200 of these items. Then comes the factory labor cost, which consists of 3 items, which is the gross earnings of the factory worker, employer payroll taxes, and the fringe benefits incurred by the employer. So all these 3 costs needs to be accounted for. These costs are accounted for in a time ticket. Now, a time ticket would indicate employees, who is the employees, number of hours worked, and to which account the job needs to be charged, and the total cost associated with that job. This gives you an illustration of a time ticket for Wallace Company. It is dated. It tells you who is the employee number. It gives you the job number to which this employee's hours need to be charged, the name of the employee, and then the start time and the stop time gives you 4 hours at the rate of $10. So $40 an hour will be charged to job 101 for employee John Nash, who is working. The last and the most interesting item is the manufacturing overhead cost. Now, as opposed to the direct material and direct labor, which you can identify with a job directly and can be charged to a job directly, manufacturing overhead costs will need to be allocated based upon a certain activity or certain base. So what we need to do is compute a predetermined overhead rate and use that predetermined overhead rate to allocate part of the manufacturing overhead cost to that particular job. All the predetermined overhead rate will have a basis, what we call as an activity basis. Here, I'll give you an example. Say you're having a big party. You've ordered food worth $400 for that party, and you've got 20 friends. Can you really track what has been consumed by each of the friends individually and then charge? It would become very difficult because it's very difficult to track what has been actually consumed by each of those friends. However, you can take those $400 and divide it by the number of friends, which is 20. So if you divide the 400 by 20, it becomes $20 per friend. And that is very synonymous to the predetermined overhead rate. The activity base in this case is the number of friends, and the overheads is $400, which you have spent. Why did we choose number of friends as the basis? The reason is we could have chosen any other basis. Maybe we could have chosen the number of students in your class as the basis. But that does not have any relationship to the $400 that were spent. Similarly, when you decide upon an activity base, that needs to have some relationship. It needs to drive that overhead. And that is why these are called cost drivers. So in this case, a cost driver for a particular overhead in a factory might relate to the labor cost. It might relate to the direct labor hours that have been incurred. Or it might relate to the machine hours that have been incurred in the factory. Or any other activity that is equitable base for applying overhead cost to the job. Depending upon the need of the company, need of the overheads, the overhead base will be decided. This is probably one of the most important things which you will do in assigning cost to a job. If this part is not done correctly, your overhead cost would be wrong, your cost of the product will be wrong, and consequently, the pricing will be wrong. Now, to compute the predetermined overhead rate, we generally use the estimated annual overhead cost and divided it by the expected annual operating activity. That is the basis. So in the previous example, it was $400 for the food divided by 20 friends, or it could be $40,000 in the overhead cost divided by the number of labor hours in the factory. As far as the overhead rate is concerned, it could be a single company-wide predetermined rate, or it could be different rates for each department. And each department may have a different activity base. So you can classify those based upon the activity so that the overhead has some relationship to the activity in question. So once again, the formula is estimated annual overhead cost divided by the expected or the estimated annual operating activity, and it gives you the predetermined overhead rate. Now this predetermined overhead rate is established at the beginning of the year. It is established at the beginning of the year so that we can get the cost in a reasonable time frame. We cannot wait for all the jobs to get over and then try to estimate the cost. So to give a timely estimate or to give a timely quote, you need to determine this overhead at the beginning of the year. And at the beginning of the year, how do you determine it? That could be based upon your previous experience, previous data from accounting can help you do that. So the next step is allocating the cost to a completed job, to a job. Once you have the predetermined overhead rate, you multiply it by the actual activity base used. So please note the difference. When you compute the predetermined overhead rate, earlier you used the estimated activity level. But when the job is done, you know what is the actual activity that has taken place. And you take the actual activity and multiply it by the predetermined overhead rate. And if job 1 has used, say, 5 hours and predetermined overhead rate is $20 per hour, so 20 times 5 will give you $100. Similarly, it can be allocated to job 2, job 3, etc. Here is another example. Let's assume the company expects an annual overhead cost of $280,000, and the direct labor cost is $350,000. In this case, let's also assume that the best way or the best basis to allocate the cost is the labor cost. So using our formula, expected overhead divided by the expected activity, in this case 280,000 divided by 350,000 gives you 80%. Since both the numbers are in dollars, one dollar number divided by another number dollar is giving you a percentage basis as 80%. What does this really mean? This really means that for every dollar of direct labor cost, Wallace is assigning 80 cents of manufacturing overhead to a job. Now, it is not necessary that labor cost is the basis. This basis could be labor hours. If the basis is labor hours, then it will give you numbers such as $50 per hour or $30 per labor hour. If the basis is machine hours, then it will give you the predetermined overhead rate will be $100 per machine hour or $20 per machine hour, as the case might be, depending upon what is the level of activity. So now we found that the predetermined overhead rate was 80%. We are looking at the labor cost for a particular job is, say, 28,000. So 80% of 28,000 is 22,400. So that is the cost that will be assigned to that job based upon the labor cost that has been incurred. So the journal entry for that is work in process inventory debited, manufacturing overheads credited by 22,400. Now what we have done is we have assigned directly the direct material cost to the work in process. Then we have assigned the direct labor cost directly to the work in process. And also now we have assigned the overheads to the work in process. All of these numbers get collected or assigned to finished goods through this job cost sheet. Now, if you look at the job cost sheet with which we started to begin the process, all the costs that are related to direct materials have been accumulated under the direct materials column from the materials requisition slip, which we saw earlier. Direct labor costs for 1,000 quantity of job 101 has been gathered from the timesheet. And also we have applied the manufacturing overhead. They have been accumulated over there by applying the overhead based upon the predetermined overhead rate to the job cost sheet. Once you add those together, you've got a total cost of the job. Once you have got the total cost of the job, you can divide it by the number of units. In this case, you have got the number of units at 1,000, so we took the total cost of 39,000, divided it by 1,000, and our cost per unit is $39. So when you look at the overall process to find the cost of the product using job order costing, what we have done is we have assigned the material, labor, and manufacturing overhead to come up with an estimated cost of 1 unit of the product. So today what we have done is we have gone through the preparation of a job order cost sheet. We started the day with our following objectives, and we have completed the preparation of a job cost sheet and the determination of overhead rate based upon a relevant basis.